Hi, you're watching ET Markets Live. Welcome to ET Commodity Talk, where every Monday we discuss precious metals and commodities. I'm Neha Vashisht, and joining me today is Anindya Banerjee, Senior VP, Head of Research, Currency, Commodity, and Interest Rates at Kotak Securities. Thank you so much, Anindya, for taking out time and joining us today on ET Markets.
Thank you for having me, and a very good afternoon.
Good afternoon. So let's quickly start our session for today and let's start with gold and silver first. So, gold and silver saw heavy profit taking last week. How much of this correction can be attributed to the rebound in the dollar index and the US Japan trade development as per you?
Right. See the link between bullion, that is gold and silver, along with
Mhm.
the dollar index, is pretty large. But there is a third element, and which is very interesting, which is the interest rate expectation around the Federal Reserve. So I'll
Hmm.
come to the interest rate expectation later. First, let me highlight the trade deal aspect. Now, US has been successful in signing a couple of important deals. One is, of course, Japan. Then we have
Hmm.
the European Union last week, and there has been an extension in the ceasefire, if I may use that word, between China and America for the next 90 days. So
Hmm.
on the surface, it definitely takes some interest off the table for gold because it creates a more stable kind of a policy environment. So
Right.
the reason why we have seen the dollar index rise and also the gold
Hmm.
and silver both, especially gold, come under pressure last week. So that is the
Okay.
impact of the trade deal prima
Hmm.
facie on the market through the dollar index.
All right. Let's also talk about near-term outlook. So, with Fed's monetary policy decision and the August 1st US tariff deadline approaching, what is your near-term outlook for precious metals right now? And could we see a sharp reversal?
Right. See, what has happened very interesting since April, when the crash happened and the whole
Hmm.
Trump tariff drama unfolded. If you take the interest rate expectation from the Fed Fund futures market, let's take the
Hmm.
December contract, which means by the end of this year. In April, the market was anticipating that the interest rate, which in America is now 4.25, will be
Hmm.
around 3.25 to 3.5 by end of this year. That expectation,
Okay.
so around 75 to 100 bips cut. Now that expectation has now gone down to just 25 bips, so just around
Hmm.
4% by the end of this year. Now what has that done is the dollar index, it has really pushed the dollar index higher. So in this meeting, the expectation is not for interest rate cut in July, but from August onwards, the pressure can build on Fed because Trump administration has been constantly asking the Fed to cut rates significantly, but Fed has been
Hmm.
quite right by not doing so because in America the fiscal policy is out of control. The fiscal deficit continues to be very high, and when you have a
Hmm.
situation where the economy is not doing bad, the asset markets are all at multi-year highs, from crypto to junk bonds to equities. At that time, and especially the tariff inflation is about to kick in because, in spite of the trade deals, if you see the base
Hmm.
uh, tariffs are anywhere between 15 to 25%. So it's pretty high. That inflation will kick in. So considering all that, it looks very difficult for Fed to cut rates significantly. But
Right.
this meeting will basically give us an idea how whether Fed is slowly leaning towards some cuts or whether it is going to be adamant of not cutting at all. If it basically sticks with a very hawkish line, it can push the US dollar index higher, and that
Hmm.
can trigger a sell-off in the gold and silver. And gold overall is doing a time correction since September, so which means it's going
Hmm.
sideways. And now
Right.
the broad range is 3250 in dollar terms on the down and 3450 broadly. On MCX, I
Hmm.
would say a near-term support, which is a quite significant one, is around 97,300 odd. And as long as that is holding, people can buy the dips. But in case that 97,000 breaks, which will be around 3,300 for the spot,
Hmm.
then we can see it come down towards the at lower end of the range, 3250 or
Okay.
95,000 on the MCX. So for positional traders, one has to be very patient in accumulating gold, and one has
Hmm.
to have a mental model where they are okay to see an erosion till 95 in a worst case scenario. Silver may outperform gold in this phase because silver has that benefit from that strong base metals market.
Hmm. All right. Let's also talk about the dollar index. So the dollar index rebounded from 3-week lows and is showing high volatility right now. Do you expect any further strength, and how might that impact the gold prices and emerging market currencies like the rupee?
See, the US dollar index on charts is looking quite fantastic for a
Hmm.
significant rebound because it could be above 100 too. Because the way the two things here, one, the biggest driver of the dollar index lower was that Fed will cut rates significantly because the US economy is going to come under severe strain because of tariffs. That was
Hmm.
the case behind dollar index falling from almost 109 to all the way to 97 odd. Now
Hmm.
that thing is now fading, that overall theme, and at the same time we have a situation where the speculators are heavily short. So you have a
Right.
market where it is trying to showing signs of reversal, bullish reversal, and the speculators are sitting on the opposite end. But it needs a trigger for a big short squeeze. So that we have already seen, as I said, the interest rate expectation from the Fed has come down drastically. Now we don't
Hmm.
expect it to really change from here because at least a one cut is very much expected by the year end. So which means it needs some other kind of a trigger for dollar index. That other trigger can come in the form of a major risk off episode in the global financial markets. If that were to happen,
Hmm.
we could see the dollar index surge, and that can have a negative impact on the gold prices. Otherwise, it looks like dollar index may remain sideways, and that
Okay.
fits perfectly with the whole thesis that the gold prices are undergoing a sideways correction.
All right. Let's also talk about rupee a little bit more. So, rupee has seen a weakness lately. This was mainly due to domestic equity sell-off and the stalled US-India trade talks. What is your trading view on USD INR for the week ahead, and especially when we take in consideration the Fed policy risk?
See, Indian rupee has been, and as you rightly said, the uncertainty around the trade negotiation with US
Hmm.
is weighing on the rupee. But at the same time, the flows have been missing. So
Yeah.
till means MTD in July, we have a very 200 million inflows because some inflows have happened in the debt. Equity is still seeing outflows. The FDI
Hmm.
figures on a net basis have also come down. So overall, the capital flows, the speculative flows are less in the Indian
Hmm.
rupee. And plus, at lower levels, RBI is buying dollars because they have a heavy short position in the forwards.
Right.
So it looks like a broad range of 85 to 87. Within that, the range has narrowed further. It is now 85, 80 to 87. Now, for
Hmm.
the USD to break out above 87 will be technically quite significant because it opens up the avenue for a new all-time high above 88. But that cannot happen without any significant trigger. Now,
Hmm.
it's our view that the trade deal is going to is likely to happen between India and US. The way US is doing deal after deal, so it looks like, and the India UK FTA has just been signed, right? So it looks
Hmm.
like the atmosphere is conducive for a deal. Uh, if that happens, we could see the 87 not get crossed, but
Hmm.
87, 86, I would say, is the immediate range with a slight
Okay.
uh, risk of the rupee heading towards from 86 half currently to 87. But having said that, the big positive is that, as I said, we
Hmm.
expect a trade deal to happen. At the same time, if you look at the RER, which we look at is basically the real effective exchange rate. Now, when we
Hmm.
consider a broad basket, which means how the Indian rupee has done in real terms, adjusting for
Hmm.
inflation compared to its peers, because USD INR becomes a very narrow scope to understand the strength and weakness of the rupee. Indian rupee is now actually at a place from where historically it has shown appreciation. So it's looking
Okay.
undervalued. compared to its peers. So unless we can pinpoint an exact case for the rupee to be weak, there are some hints that the domestic economy has slowed down, but that's not
Hmm.
enough for the rupee to remain so undervalued. So it looks like that a trade deal with US could give some respite to the Indian rupee. But overall, this
Hmm.
86 to 87 range could be in play over
Okay.
the month of August.
Okay. So, Anindya, there's a lot of tension between Thailand and Cambodia right now. And along with that, other unresolved trade issues also are there globally. Could geopolitical concerns lend a new support to gold and silver despite these corrections that we saw in both of the metals?
Right. But see, any geopolitical tension will not have an impact. There are
Hmm.
two things here. It needs to be of some significant magnitude, like so what happened between Israel and Iran, or
Hmm.
let's say Ukraine and Russia. So Cambodia, Thailand, which is unfortunate, but it still doesn't fit into that scale where it can have a huge global impact, and that can
Right.
have lower impact on gold and silver. But having said that, geopolitical hotspots and the risks are very much there. So it can
Hmm.
continue to have these impacts on gold and silver. But one thing is that such impacts don't last for long. They last for 1 2 days and then they fade. So it will be a temporary impact.
Okay. All right. Before we close, what can we expect this week from bullion and other metals in terms of commodities in a generic sense?
Right. See, silver, as I said, looks interesting at lower levels because it's currently overbought around 1 lakh 13, 1 lakh 14. It looks
Hmm.
a good place where the medium term players can look at accumulating longs. Gold, as I
Hmm.
said, is a buy on dips, but if you are a positional player, a medium to long term player, have that ability to absorb a hit till 95,000 in case it
Okay.
breaks that 97,000 mark. But otherwise,
Hmm.
97,000 to 99,000 is the broad range on which the gold prices can hover in the MCX. And apart from that, copper and aluminium looks quite interesting, and oil will be range bound.
All right. Well, this marks the end of our segment for today. Thank you so much, Anindya, for joining us today on ET Commodity Talk, only on ET Markets Live.
Thank you for having me.
Thank you so much, everyone, for joining us.
Thank you.